A portfolio that had stock allocations at 60% and bond allocations at 40% in mid-February may now be more evenly split between the two asset classes, facilitating the need for some investors to shift exposure toward stocks. Funds can raise stock allocations in several ways, including selling bonds to buy stocks, using the cash in their portfolios or putting fresh money toward equities, said Leo Akison, Director of Multi-Asset Ratings at Morningstar. From speaking with portfolio managers, Akison said many have not been waiting for quarter end to make adjustments and instead are revisiting their portfolios daily and adjusting the split between equities and bonds to maintain their desired risk exposure. As managers rebalance and reallocate toward equities to get back toward their strategic weights, that would be a support for equities, he said. U.S. stocks have bounced more than 17% from their lows this week following unprecedented stimulus measures from the Federal Reserve and U.S. Senate passage of a $2 trillion bill aimed at helping unemployed workers and industries hurt by the coronavirus pandemic. Few believe the volatility in markets has ended, as the outbreak's trajectory remains uncertain and the economic fallout potentially massive. Still, the Fed's pledge to buy billions of dollars worth of bonds, including $75 billion in U.S. Treasury securities a day this week, may be a boon to those looking to rebalance. You are buying equities at significantly lower prices than they were and you are selling bonds that are being artificially bid up by the Federal Reserve, said Michael O'Rourke, Chief Market Strategist at Jones Strata in Stamford, Connecticut. On average, the S&P 500 has climbed nearly 7% over the final 5 days of a month in which bonds outperformed stocks by at least 10% during the month's first few weeks, according to Christopher Murphy, co-head of derivatives strategy at Susquehanna Financial Group, citing 8 such previous occurrences in data back to 1990. Pensions, endowments and foundations, overseeing as much as $15 trillion in assets, are among those that often look to adjust their portfolios around quarter end, said Steve Foresti, Chief Investment Officer at Wilshire Consulting. All else equal, these institutions are fairly significantly under their target weight to equities, meaning they need to purchase to get back to their target, Foresti said. There is no question there is some natural buying and selling around those rebalancing activities.